Hey, what's up, everyone? I'm Kirsten Paris with eXp Realty in Asheville, North Carolina. Thank you so much for being here. Every week, we drop a new video sharing tips and tricks and education for all of you mamas working hard out there in the real estate industry. I'm a mama to my two sweet kiddos, Riker, who is 3, and Aylin, who is our little newborn. Every day, these two inspire me to work harder and to create a legacy. We've created this space where we can learn, grow, and achieve massive success together. Thanks for being here, and I hope you enjoy these videos. Hey everyone, welcome back. Thank you so much for being here. I have my good friend Linda Shinpaugh here. Thank you so much for joining us.
Thanks for having me.
Absolutely. So, Linda, can you tell us a little bit about what you do and what you do on a day-to-day?
Yeah, I'd love to. So, I'm a licensed loan originator, a loan officer. On a daily basis, what do? I work with folks like you. I have a lot of real estate partners that send their clients my way. I also have a big sphere of influence, and so I reach out to them directly, and then they'll come back and give me referrals and so on and so forth. But I spend a lot of time talking to people who want to buy a home, maybe refinance, depending on where we are in the market cycle. Getting to know what their dreams, what their goals are, what their desires are, what's most important to them. And then, be a nosy neighbor, asking all those questions about income and credit and how much money's in the bank and polling credit, and really just becoming a safe place for them to understand how to live out their dream of home ownership.
Can you share with everybody a little bit about your lifestyle, like your family lifestyle? You guys are on the road
Sure.
And how you work remotely.
6.5 years ago, we wanted to leave the city that we lived in. Mm-hmm. We wanted to venture out. We had started camping and traveling. Our kids were young. They loved it. We just wanted to have more adventure, and we were ready to break out of our small town. And so with my husband being in real estate, we thought that was impossible.
Yeah.
But we had worked hard for a few years to get him to run his business and not just be the business.
Sure.
And so we did. We left our hometown, but we didn't just move to another city. We actually decided to embark on this full-time traveling journey. So at the time, we pulled out of town in our fifth wheel. Now we have a motorhome. But we are in different parts of the country any given month. So we get to go and work and live in places that we want to. Mm-hmm. And because of that, it's allowed me to create relationships. Like I can lend right now in 48 of the 50 states.
That's amazing.
My kids are awesome. They're teenagers now, which is crazy. They were 6 and 8 when we started this. So, they're used to it.
Yeah.
And when they walk in the room, they can tell if I'm on a phone call.
Sure.
And if I'm, if they need to be quiet. And then I try not to hog the room all day for work. I'm like, okay, go for it. The next hour, it's yours, right? Yeah. Make as much noise as you want. Be silly.
Well, thank you for sharing that. Yeah. We've all heard the key phrases like shift happens or shifty business. Like there is a shift, so to say. So we've heard that term. Can you explain what a market shift means?
Well, in my world, it means that rates are either changing, they're going up or down, right? Okay. So a market shift for me, that's what it would mean. And also in the background, my investors who ultimately provide all of the money that we lend, their appetite is changing. Okay. Based upon what's going on in the market, there are different products that they want to lend and different products that they don't want to lend Sure. anymore. And so, right now as we see rates go up, a lot of our investors are cautious about which loan products they really want us to be selling to the public. And the way that they control that is in the interest rates that they offer with certain products. Mm. A lot of people are like, can I get an adjustable rate mortgage right now? Because they're thinking, what can I do to get the rate lower? Yeah. And typically getting an ARM would do that. Well, no, we'll do a few here or there, but the investors don't want to have those ARMs on their balance sheets.
Sure.
They don't want them in their portfolio. And so when I go to price a loan out for somebody, I'm like, it doesn't make any sense. You pay higher rate to have a rate that's going to adjust. Let's go with the 30-year fixed. But that's what it means. Rates are moving up or down, and then there's it's really confusion too, right?
Yeah.
But there's this chaos and confusion in the background where the investors, the lenders, the people that really have the money in the products are going, this is what we think is going to happen, so we only want to lend on these kinds of loans.
Sure.
Or maybe they have more of an appetite for primary residences, and so they make it a little more expensive for second homes and investment. There's a lot of reasons that cause market shifts, but that's what a market shift is in my world.
And that's great, and thank you for sharing that. And obviously for us in the real estate world, it being something maybe a little bit different, is it homes are staying on the market longer? Are we seeing more price drops? Are we seeing a change in inventory? I think a lot of it is correlated. We go work hand in hand with the lending. As you see changes in your industry, we get it directly too, and vice versa, I imagine.
Yeah.
So just to kind of quantify that when we talk about this, so right now the shift is that rates are increasing. Can you tell me, like, objectively or ballpark, like, what were they when they were really low, and kind of where are they now? And I know this is so dependent upon the person and credit score and type of loan.
Right. And how old you are too, right?
Oh.
Because it's funny because I say, I try to think about, I do remember getting interest rates in the 7s before. For the last 2 decades, rates have been maybe as high as 5%.
Sure.
But and we thought, oh my goodness, right? We had them in the 2s, we had them in the 3s. So, even in the last year, we had rates in the 3s and the 4s.
Yeah.
And then once we crossed 5%, we thought, oh my goodness, the sky is falling. But right now, rates are in the 6s.
Okay.
And you will see people getting 7s.
Okay.
So that's just where they are.
Okay.
And if you are buying a second home or an investment property, chances are you're going to have to pay some points.
Okay.
So the reason for that is, and I know you may ask me this in a little bit, so don't let me get ahead of you.
Okay.
But the reason that you're going to see more points right now is because, in the food chain of a loan, you've got, these big investors and institutions that really have the products. And then you have the people that sell them, right? I'm a loan officer, so I'm selling products, right?
Sure.
We have clients come in, I find the best product and marry them together. And then afterwards you have the servicers. Okay, well, the servicers are used to holding loans for 5, 7, 10 years, like for a long time, not for a few months or a year. And their profit structure is such that they need to collect payments for that long for it to make sense for them to do what they do. The lending food chain makes profit in 2 ways: interest rate and points up front, basically, right? So they can either earn profit over the period of time that the payments are made from the interest rate, or they'll charge points up front.
Okay.
And so that allows them to make what they need to make for all the wheels on the bus, to turn. Okay.
Yeah.
Right now, what we believe is that by the middle of next year, around the middle, summer, fall of 2023, we believe rates will come back down.
Okay.
A couple percentage points.
Okay. That's huge.
It is huge. I like to follow Barry Habib. He's a mortgage guy. He's an economist, and he talks at a 5th grade level about all this really technical
That's
stuff.
my speed.
He is awesome. And so anytime Barry has a video, I can get access to him. I watch it. Like he's wonderful, but yet he still gives you the technical terms so you can understand. But I followed him for my career, and sometimes people look at him and go, he's crazy, that's not going to happen. Well, it's always happened, because he understands how the markets and everything play out. So if rates come down, or I like to say when rates come down next year, the vast majority of people that I'm giving loans to right now are going to need a refinance. It's going to make sense. Okay. And so as the servicer at this end, who's at the end of this loan, food chain, if they're going to only collect payments for 8 months, 10 months, a year, and not 5, 7, 10 years, well, guess what? They're not going to make a lot of interest. They're not going to make a lot of profit. And they may not make enough to even break even on that loan. So that's why you're seeing more points on the front end, because then those get spread out along the back end of the lender food chain. Makes sense?
Makes sense. Yeah, so they're kind of anticipating that people are going to be refinancing in 8 to 10 months.
They are.
Okay.
I try to educate everybody I work with about that, so that way, there are shops that just charge a half a point, that just charge a point because people think it's normal. It's not normal.
Yeah.
There are times in the market cycle where you need to do that, but there's a lot of times where when everything is really balanced and not in chaos, that the interest rate is enough for everybody on the back end of the loan, the loan food chain. Like it's enough for everybody to make what they need to make in the time that they, are involved in the process. So so that's why you're seeing more points, and it just is what it is. So my goal for people right now is, let's find you the very best rate with the least amount of fees.
Yep.
So that way, when you do refinance, you didn't waste a bunch of money this go around.
And that makes a lot of sense, and I appreciate explaining that to me, because I've always heard the term points, but I knew that it was more money for my clients necessarily, like, when they were closing, but I didn't really know what it meant and or why. So that's very helpful.
And they're not always bad.
Yeah.
Sometimes people want to buy a rate down and it makes sense, but it's like anything else. You don't get, nothing's free.
Yeah.
There's no free money, right? And so if you want this, you have to give that. And so points allow us, they give us flexibility in my world, to buy rates down, to do different things. But right now, that's why you're seeing more points on loans, because we have to, everybody has to be whole on the back end, or else we're going to go out of business.
Does that mean that clients' closing costs are a little bit higher right now?
Yeah, they can be.
Okay.
Just a little bit, maybe it's $500, maybe it's $1,500, but it's just a little bit. Okay. So it's important, I always go through a fee sheet in detail with my borrowers up front.
How often do rates change or increase?
You're familiar with the stock market, right?
Yes.
That's how often rates change, actually.
Oh, wow, okay.
The rates are moving in the background all day long, just like Apple stock. Now, for me, typically, my rates come out around 10:30 every morning, and unless things are super volatile in our world, I won't get an updated rate sheet throughout the day.
Okay.
There are days where that happens.
Yeah.
But it's not often.
Okay.
So for me, typically I get a rate sheet in the morning and it's fine until the end of the day, and then a lot of times you don't lock at night and you wait till they come out the next morning. But they're moving just like stock on the stock market.
As a realtor, we get people that I usually encourage my clients to get pre-approved versus pre-qualified. And so if somebody is pre-approved for amount for, say, $300,000, they're pre-approved for that amount, and they got pre-approved 60 days ago, now that things have changed so much and the rates have gone up, does that number change for them? Does that $300,000 change for them?
It can. And so my practice is that once a week I'm touching base with these folks that are pre-approved and out looking for homes. So that's just my business practice. For me, on Thursdays, if I haven't talked to somebody that I know is out shopping in my pipeline, I call them just to say, hey, how's it going? And then, I take personal responsibility that as rates make significant movements, to then go, hey, we need to update your pre-approval amount. But yes, it can totally impact. I mean, a rate moving a quarter, a half, 3/4 of a point, which we have seen that in 60-day windows this year.
Yeah.
I mean, it can increase somebody's payment $25, $50, $100 sometimes.
Yeah.
And especially for that first-time home buyer who's in a lower price point for the area that they're in, it's already so hard for them to find something affordable most of the time. $50 a month could totally knock them out of the market.
Yep. Look, I've seen pre-approvals before where they have an expiration date on them, 60, 90 days. Do you still do those?
When we pull credit, our credit reports are good for 90 days.
Okay.
And so if I were going to put an expiration on a pre-approval, it would be to coincide with the credit report.
I see. Yeah.
Because, if I'm working with somebody, it takes them 2 months to find a property.
Sure.
When we actually then when you all secure the contract and go under contract, and then when we get the loan application filled out, we'll actually repull credit then. So we don't have it expire during the transaction. But you're always holding your breath. It's like, please don't let anything have happened. Please don't let anything, because there are errors, there are mistakes,
Sure.
all of that. But then sometimes people just do stuff and they, even though you tell them not to. So
don't buy a car while you're buying a house.
And don't buy the washer and dryer yet. Just wait till you get in. You can go that afternoon, but don't do it the weekend before. But anyhow, so sometimes, those expiration dates are tied to that. Right now, that the pre-approval for me is, at this rate with this much down and this sales price. But you know what? If you go out and show one of your clients a home in a neighborhood that has a huge HOA fee, that can blow it too.
Sure.
So a pre-approval is the way to go for everybody. I don't care what the market is, every time, because pre-approval means that I played nosy neighbor and I asked them for all of their detailed information, but then they sent me their pay
documents.
stubs. Yeah. They sent me all their documents. I've looked at the tax returns. I've looked at the pay stubs. I've looked at the bank statements. I inspected what I expected, and it all, it works.
Good.
So I've seen their documents to back up what they've told me, and I've run them through Fannie Mae and Freddie Mac's automated underwriting systems, which is what banks underwrite to. So I have that technology available to me up front. So pre-approval is definitely the way to go. But there are lots of things that can mess it up. Even, the rising interest rate environment for sure is just super important to stay on top of. But anytime clients are tight, we need to be paying attention to everything.
That's I didn't even think about that, so I'm glad you brought it up. But we certainly have communities and condo complexes where the HOA fees are really high a month. So I guess if the debt to income ratio is tight or whatever's tight, we should probably consider that. So that's a good point.
Yeah.
So what does a refinance look like? Like, how do they start that? When is a good time to start that? And how much does that usually cost? Are there appraisals involved? How does that work?
Yeah. So my rule of thumb, although I will crunch numbers for anybody anytime, my rule of thumb is about 1 percentage point saved is when it makes sense.
Okay.
Now, if the loan amount is big enough, a half a point, 3/4 of a point could make a big difference.
Sure.
You start the process just like you're buying a home.
Okay.
You still make loan application. There isn't a realtor and there isn't a seller involved. I'm going to play nosy neighbor. We're going to get all those documents from you. We're going to do all of that. Depending how much equity you have in your home, we'll get appraisal waivers, which means you don't have to order an appraisal. So that's kind of a cool thing in a refinance. If you have a lot of equity in your home and we run you through Fannie and Freddie's automated underwriting system, a lot of times we'll get appraisal waivers because there's so much equity. They're like, this is fine. This is a good risk. There's a calculation that I perform. We will look at all the fees. So you will still have your lender fees because we still have to underwrite it and process it and pull credit and all those things. You're still going to have title insurance. It'll be reduced because typically they just go back to the date that you purchased the home and then update the title search since then. So they're not going back to when the previous, like who you bought it from since they've owned it and all that. So they take what you have and then they just double check since you took out your loan to make sure everything is cool. So title insurance is typically a little bit less. North Carolina is nice. It has less fees for real estate transactions in general than some of the other states. Some other states, they actually tax you when you're taking out a loan when the deed changes hands. Yeah, I can add thousands.
Yeah.
Florida that's my homestead state. Yeah. But we don't have a state income tax. So, it's all a trade-off. But from a refinancing standpoint in the state of North Carolina, the fees are very straightforward. You've already done the survey. You've already done, so those things don't happen again. Okay. But it can still be $2,000 to $3,000. It can still be a couple $1,000s for sure. And so what I do is I do a real simple math calculation. I do it right now whenever people are thinking about paying points, because paying points is like refinancing. It's extra fees, right? Doesn't make sense to pay these extra points to get a lower rate. Doesn't make sense for me to refinance and have these fees again to get a lower rate. So it's the same idea. Yeah. Basically, all you do is you say, how much am I going to save each month in my monthly payment? Let's say it's $50. How much is it going to cost me in fees to do that? maybe it's $1,000.
Yeah.
Right? And then you would take $1,000 and divide it by 50.
Yeah.
And the answer would be 20 in this example. And that means in 20 months,
It would pay for itself.
you would pay for yourself. Saving $50 in your payment for 20 months would pay back that $1,000.
Yeah.
Then in your 21st month, you would actually really save
Yep.
the $50.
Yeah.
And so that's my litmus test. Looking at like that time value of money, right? How long till I really pay myself back and I'm really saving that? And so today, with buying points down, I want that answer to be less than 12 months. At least for me. At the end of the day, it's the client's call.
Sure.
Like I'm not, it's their decision to make, but that's the lens I look through. When you're refinancing, I like it to be less than 24 months.
Okay.
I think that's pretty safe.
So what do you recommend right now? Like, this has happened to me personally in my business. I have had people that were hot buyers. We were seeing a lot of homes, and they have just pumped the brakes on their home search. And by pump the brakes, I mean like slammed on the brakes. They have stopped searching right now. What would you recommend for us as realtors to tell our clients, or when you're speaking to these clients directly, when they get a little bit of trepidation around, because there's a lot of hype around this, right? And a lot of fear. And I think, so what would you recommend us sharing with our clients, or when you talk to clients directly?
Yeah. So first of all, I'll say there is a little more inventory in most of the markets.
Yeah.
And like I said, mortgage applications are at an all-time low in the past 27 years, but it's still a healthy market.
Yeah.
And the people that are getting pre-approved, they really want to buy.
Sure.
And the people that are selling really want to sell.
Yep.
And there are still multiple offer situations.
Oh, yeah.
There's not 20, but there might be 2 or 3. Because
Yeah,
when there's a good house, the people are ready to go.
Yeah.
So I let them know that, like, hey, it's still a healthy market. You're going to have to make quicker decisions on, so that's why we do the pre-approval up front, and then that tees them up for you.
Yeah.
Right? Just reinforcing what I know you're telling them. Then I go through with them, like, hey, this is where rates are. I go through that conversation about, if you can wrap your mind around me helping you get the very best product, the best rate with the least amount of fees, knowing that most likely you're going to refinance in a year, then this is great. Okay. And then I talk to them about what we just did, that math example.
Yeah.
Like, we're going to figure out how many months would it take you to pay yourself back if you paid points.
Yeah.
When you refinance. But a little catchphrase that I'll use with people is marry the house and date the rate. So it's okay. Go find that perfect house, right?
Yeah.
Like, if you're upgrading, if you're downsizing, some people are still wanting to buy short-term rental, investment properties.
I have clients right now.
This is a market for that. Yes,
Yeah.
you have a lot. And there's a lot of people still wanting to be active in the real estate market. And so I'm like, go find a house.
Yeah.
Fall in love with it. Totally marry it. Make the commitment. Go under contract. Let's get it done. But we're going to date the rate.
Awesome. Thank you for sharing that. I think it's been really helpful. So you mentioned one of the gentlemen you follow, Barry Habib. So we'll put Barry's information and how you can follow him in the comments below. So check that out. That was one of the ones that Linda recommended. If you have any questions about what you heard today, or of course if you need any lending help, Linda and her team has been really wonderful for me and my clients and my business too. So do you have any other words of encouragement? I've talked to a lot of agents and they're really feeling the pressure of this market shift.
Yeah.
Any words of encouragement? You've been in the industry for so long, so you've seen some real highs and some real lows.
Just keep going to work. Like, this is a job, right?
Yeah.
I think whether it's on my side of the aisle or your side of the aisle, when we become commission-based employees and we kind of have our own business, right? A lot of people flex themselves right out of business.
Yeah.
Just knowing what your activities are every day. You have to know what your work week looks like, and then you got to go to work.
Sure.
And for the 20 plus years I've been doing this, I have focused on my activities and not the results. That's how I have won the other shifts that I've been through, because I got the t-shirt from 2007, 8, 9. And then there's been some other, and then after that, there were so many changes after that too. But yeah, that's it. Just know what your plan is and work your plan, and then go home and enjoy being home, and then come back the next day and repeat, rinse and repeat.
And that's the Shinpaughs. so Jason, Linda's husband, he's one of my real estate coaches, and he's wonderful, and he has the same mantra for our real estate business is chop wood, carry water, and that's a great book too that I can link to. But it's just basically fall in love with the process and divorce the results. So it's just okay, the market is shifting, my buyers have pumped the brakes. That's not going to change what I do every day. I'm going to get up and I'm going to prospect from 8 to 11, and I'm going to, so that's encouraging. So thank you for sharing that with us.
You're welcome.
And I really appreciate you being here. I hope you guys all got something out of this too. If you like what you heard today, just make sure you like, comment, and subscribe. Thank you very much. We all learned so much, and I appreciate your time.
Yeah, absolutely.